Canadian Farmland Investment Fund. Managing risks when looking for farmland by using an investment fund. Right now, there are a lot of people looking for farmland, and for good reason. The markets, which have been in the news a lot recently, continue to demonstrate signs of volatility, rising and falling every day. Meanwhile, the international community appears to be losing faith in the United States dollar, and economies everywhere are braced for inflation. While other hard assets like gold and silver are being considered, farmland is more appealing as it is more consistent, fits with the times, soaring need for food around the world, and actively produces a revenue stream, unlike gold. When you're looking for farmland, you typically have one of two choices. You can try to find some farmland to invest in directly, or you can go with a farmland investment fund. Both choices have pros and cons, and it's not always an easy decision to make. One thing you should make sure to do either way is evaluate the risk of your investment plan. Understand the value of the underlying asset, don't just look at the deed and hope for the best, and have an exit strategy. When you or your investment fund are evaluating a potential piece of farmland, they'll be looking for land that has a regular tenant, is producing a crop that is currently favoured on the commodities market, although picking a crop that has room to grow is not a bad idea either, and will stably and consistently yield a return on investment every year, as well as the opportunity for capital gain as the property increases in value over time. One of the signs that farmland will continue to increase in value is the growing demand for food around the world and the increasing population. It's estimated that around 200,000 people are born every day, and the world population is only expected to grow as time goes on. Add to this the fact that emerging nations are beginning to demand healthier and wealthier diets, such as meat, which takes 7 times as much agricultural produce to grow. Despite this fact, there is still some risk involved with purchasing farmland. The difference between an investment fund and investing directly is all about how you want to manage that risk. By going with an investment fund, you spread your investment out. You pool it with many other investors and acquire larger portions of land with more reliable tenants and the chance for a more consistent rate of return. By investing directly, you are working more closely with the tenants and stand to earn more due to the concentrated nature of your holdings, or lose more depending on market factors and even the weather that year. In the end, it's your money, and it's a decision you have to make on your own. If you're interested in finding a Canadian farmland investment fund and you'd like more information, you've come to the right place. We've done a lot of research and found an excellent Canadian farmland investment fund, and we're happy to share what we know. To learn more and get in contact with someone, please click the link below this video to visit our website.